Hello, everyone. Welcome back to the Entrepreneur Investor Connection on Beginner's Mind on Clubhouse. Today, we're going to be discussing financially freedom through cryptocurrency. Basically, I've started the wallet. I said I would start a live wallet, public wallet. Oops. I said I would start a public wallet live, and I've been doing that. And thank you for all the new followers and people following along. I wanted to create today's show to just discuss what I've been doing and get any questions because I know a lot of people who see what I'm doing and are like, what is going on? So the overall strategy of what's going on, just so if you're watching the short clips and you're not watching the longer ones on YouTube, basically what's possible now through decentralized finance is you can take cash, put it into crypto through USDC coin, USD, US dollar coin. And when you put this into the blockchain of the Avalanche blockchain right now, they're giving really high interest rates. But at the same time, on this app called Aave, you can borrow off of it. So when you combine all of these things, you can create financial freedom for yourself much sooner than any other asset class I've ever seen. So what I'm doing right now is I'm showing people how to build up their banks and then on the right times buy and on the right times sell to keep growing their bank. Because what you can do is at any time you can borrow off of this bank to do things like pay your bills, right? So if this bank gets to a certain level, you can live off this for a while because just in the history of where cryptocurrency has been so far, it has on average minimal doubled every year in value, right? So let's say that keeps happening, which of course eventually it won't happen. This is why I'm creating the content now, because it's still happening. Actually, within the last year, Ethereum has grown by 966% and Bitcoin has grown by 350%. So if you took, let's just make simple math. You took 10,000 and you put it in Ethereum, Bitcoin, and then you had some in cash, that money, the Bitcoin and Ethereum money, would have doubled, right? So that would have been $40,000 and you would have had the extra 10. So think about that. If your bills, you need to pay them, that Ethereum value gave you a lot more months to borrow off of your bank, right? So when you add in these new coins like Avalanche and Aave and Polygon Matic, those coins have grown even more, like thousands of a percent. So putting all these pieces together, I want to make sure everybody understands this and starts dabbling in it, because every day you don't start doing it, the amount of interest that you're possibly going to get is going to go down, and the amount of returns on the multiples of Bitcoin and Ethereum and these other coins are going to go down too, because the more people get into the coin, the less growth there's going to be. So right now, we're in probably the most perfect time to start because all the prices are down and many people believe that the prices are about to shoot up to the end of the year. Of course, this is not financial advice, so you do have to understand the downside to this is the coins can keep going down in value and not come back up for a very long time. And some coins you invest in may never come back up. That's why what I'm showing the safest coins for a reason. Ethereum and Bitcoin, they're the safest two coins in cryptocurrency. Aave is the biggest crypto bank. Basically, it allows us all to create crypto banks. And I did look at something. 10% of all cryptocurrency value is currently in Aave. So that's like if there's one bank with 10% of all the money of the world, do you think that's a pretty safe bet, to buy stock in that bank? Pretty much. So Aave is a very safe coin, in my opinion. And then the coin of the blockchain that we are in, which is Avalanche. If Avalanche goes away, the entire blockchain and all the companies around it will go away. So in my opinion, the coins I'm talking to you about growing your bank with are the safest in the industry, right? Of course, nobody knows what's going to happen with any of this. Avalanche can go away. But in the meantime, while it's allowing this type of growth, we should be doing it. So what I want to start out by doing is going over the wallet, the current wallet, and then getting questions. So what I'm going to do, right, is I'm showing on YouTube. If you're on Clubhouse, I'm also live on YouTube showing the wallet. So basically right now, the total wallet went from $1,000 to $986, right? And this would have been the same percent no matter how much I put in. If I put in 1,000, if I would have put 10,000, if I would have put 100,000, if I would have put 1,000,000, I've literally seen billion-dollar wallets doing this, right? So right now, it went down. What's that about? 15%, 1.5% about. Why is that? Because the coins I'm investing in, they're going down right now. Aave is going down. Bitcoin is going down. Ethereum is going down. But that's the best time to buy, right? You don't want to buy when things are at the highest because they inevitably come back down. So what I'm trying to show you guys is the best time to buy, the best time to sell some to grow your bank. So right now I started buying on Monday, actually. And the first day, Bitcoin and Ethereum were down. The second day, it went further down. The third day today, it went even further down. So right now, but it's not that bad. But what this is going to do is when it comes back up, we bought at the best time. And I'm going to show you why, right? So I'm going to take you to the coins, the breakdown. So, okay, if you're looking at the screen, you can see Bitcoin has been in dark red for a few days now. But look at where it was not too long ago, 67,000. Actually, on November 14th, it was 65,000. Today, it's 60,000. So again, it was light red when it was 60,000. So this is why I say don't buy on anything other than dark red. That's the best historical way of looking at data and saying, if this is happening, this is a good time to buy. Not to say every single dark red day is going to be the best day, but historically, on average, if you see a dark red day with the MACD, which is right here, that is a good day to buy. So what I've been doing is showing you guys click by click how to do that on the phone and on the computer. So if we look at Bitcoin, it's down dark red. If we look at Ethereum, it's down dark red. And look, last time it was dark green, it was 4,800, and today it's 4,200 because it's dark red, right? So again, if we would have been buying at 4,800, today we'd be upset because it's down a lot. But if it's the opposite and we bought today and then in a few weeks or a few days, it goes back up to 4,800, we're happy, right? So part of what I think happens, and this is like just where they talk about becoming a sophisticated investor, is people buy on that high of, oh, it's going up, it's going to keep going up. But if you look at the history, that never happens. It always goes up and comes down. So if you just start training yourself to say, okay, it's going up right now. I know it feels good. I want to buy more, but this is not a good time to buy. And I know a lot of people have reached out when Ethereum was going up and up and up, like, should I buy? Should I buy? And I said, no, I'm telling you not to buy. But if you want to buy, not financial advice, but I wouldn't be buying right now. And if they would have waited, they would have bought at a better price today, right? So this is what we do. Polygon, which is another blockchain I'm doing this on, but I'm not making videos on it, is down as well. Avalanche is up, actually. So today on a few of my wallets, I sold a good amount of Aave because for the people that have been in the Cracking Crypto class, you guys remember when I was showing you Avalanche was here. It was like 55 cents when I told you to start buying, right? Now it's $1. It's $100. So it was $55 and went to $100. So that means in the time span of our class where I mentioned this, you have doubled your money. If you bought it at that time when I said, okay, this is dark red, buy, you would have doubled your money right now. So what I did was I sold a good amount of that doubling of the money, right? So now I have it as cash. Why? Because when it comes back down and it goes dark red again, I'll have cash to buy more, right? One other thing to understand and take note of is every time you do this, that is a taxable event, right? So let's do easy math again. Let's say when it was down to 5,500, I put $1,000 in, and then it went to 100, and now it went to $2,000. And let's say I sold $500 of that. The government wants their tax on that $500 because I made money. That's like working a job, and they pay you $500. So you do have to set aside taxes and stuff like that because these are gains. These are financial gains, just like working any job. Even though it's in the matrix and the blockchain, eventually the government is going to understand where your money went and be able to track down the money you made. So might as well get out in front of it and pay your taxes. So on that note, Any questions from anyone in the room? I know actually 2 people in the Clubhouse are following along. I don't know if you guys have dove as deep as I am right now with the $1,000 wallet, but I would love to hear any questions from anybody anywhere who is on the live.
Hi, Miguel. It's Leah. How are you?
Hi, Leah. How are you?
Good. So when you say, so you doubled your money and then you sell it, you say you sell it. So you use 2 terms. You sell it and then you convert it to cash. So when you sell it, does that mean you're converting it to cash?
Yes.
Your gains?
Yes. So
you mean the same thing.
Same thing. So basically how I do it, I'll show you on the screen actually. What I do is I just swap from the gain. So let's say I don't have any Avalanche on this wallet yet because it hasn't been a good time to buy Avalanche since I started this wallet. So let's say I did gain on Ethereum though. I would press swap and I would put the amount I'm willing to sell. So what I normally do is as it's going up, I'm selling percentages at a time. So if it's dark green today, let's say we were here, I would sell 5% of the total amount of my portfolio of that asset, right? So if it's, let's say I have 1 full Ethereum, I'm only selling 5% of that full Ethereum. Why? Because it keeps going dark green for a while. If I sold it all, I could miss out on some big gains, right? So I don't want to be selling the whole thing in the first time that it's dark green. I want to sell a little bit every day. And hopefully I just keep selling on the way up. And then when it comes down, I have a lot of cash ready for the dark red. Does that make sense?
Yep. Thank you.
Awesome. Awesome. How about you, Paco or Isabel? Any questions or anybody else? I invite anybody up. Anybody trying to follow along. And if you're in radio mode, that's fine. I could keep talking about what's going on because I have gotten a few questions on Instagram. I keep putting up polls and questions to make sure people understand. And I know a large percent of people, they're just starting to see me click through these buttons. So they haven't got the early part of the setup and the strategy. So the overall idea, again, I want to make sure people understand is we are setting up a bank that will eventually take us to financial freedom. How? Let's say your bills are $1,000 a month. I'm going to make it super easy. I know nobody's bills are $1,000 a month. Hopefully they are for some of you, but mine's are definitely not. Let's say it's $1,000 a month. And we can have 6 months of our, they say everybody should have a 6-month emergency fund. That's very tough for most Americans. Most Americans don't even, I know, right? Most Americans don't even have a $600 emergency fund. That's the truth of where we are as a country. So to have a 6-month emergency fund is like, yeah, right, for most people. So, okay, let's say your bills were $1,000. You would need $6,000, right, to have an emergency fund. But what if you didn't need all 6,000 to have that emergency fund? What if with 3 you can borrow 2, right? So here's where you start to see how, okay, how can I get to that 3,000 though, right? Right now I'm at a $1,000 amount. The way you can get there is if you buy at the right time and sell some at the right time, you start growing that collateral, right? So, and of course, hopefully you have some type of income where you can bring in new money, right? But on my wallets and some of the wallets I have not brought in new money. I've only sold at the right times, bought things and sold them at the right times. One thing that is starting to come up for me is some of the NFTs that I purchased are growing a lot. And I'm like, oh, should I sell the NFT? So the NFT one is something that I'm really starting to study and figure out, should I sell some of this stuff? But guess how I bought these NFTs? I borrowed off of my bank, right? So I didn't take the risk of bringing in new money and buying the NFT. I borrowed off of them. So that means I can borrow less and less, right? If I borrow to buy an NFT, that means I can't borrow to pay my bills, right? So what I've been doing is, as the coins go up, I sell some of the coins to pay down the loans. But now what has happened, and this is like pretty recent, the NFT value has outgrown my coin value. So that means that it is kind of working, right? Like if the collateral assets I've used are buying things that are worth more than the money I use them for, That's good. That's just like real estate, right? It's like if you buy a property, borrowing off of your home, and now that property is making you more money than it cost you to buy. This is the same idea. It's just you can do this with $10 at a time. And that's why I started with $1,000 wallet because I felt like $100 was just not going to make as much of an impact. But it's the same percentages. 100,000, 10,000, you will be up the same amount of percent. So however much you can do. But the idea is to start playing around in this system because it's so new that the gains, they're never going to be better. Every time that it happens and what was supposed to happen in the next few months, it happens less every time, right? So this time is going to go up, but the percentage gain is not going to be the same as much as it was in 2017. So if you did this in 2017, you're much richer than us doing it now. And if you did it in 2013, you're much richer than the people in 2017 and us, right? So again, Aave, though, was not available in 2017. So this is where we are like in this perfect time to get in, understand it, take less risk. Most of what I'm showing you is very low risk. If you look at my wallet, I have $600 right now. And look, they would let me borrow 685. When I woke up today and I opened up the wallet, they were going to let me borrow up to 700. But what I did, I bought more coins. So the more riskier the coin you buy, the less they let you borrow. This is why I say you got to have USDC in your bank, because it allows you, one, the security of, let's say the whole market comes down tomorrow. We're still safe because my loan, if I took the loan, I haven't taken out any loan yet on this wallet, but let's say I did take a $700 loan today. The market would have to go so low that Bitcoin and Ethereum would have to go under $20, right, of my value, my current value of them, for that to happen. So that's very, very unlikely to happen. That means it will have to go down like 1% of what it is right now. So this is completely safe in that way, right? Unless everybody just says Bitcoin and crypto is all crap. This is never coming back. I can't see that happening. There was a good story today where crypto.com just bought the naming rights to the I think it's the LA sports arena for 20 years. They paid $700 million for the naming rights of the arena for 20 years. What does that tell you? Imagine where we will be in 20 years. Imagine where all this will be in 20 years. And we're starting right now. We're starting 20 years before, the future world is starting to really get involved, because most people are still not involved in this. Most people won't click around like we're doing. So we're going to benefit from being that early. And I just want to make sure that people have everything they need to do that. So again, I came on live today to just see what questions, because I know this is confusing. Go ahead. Anybody, any questions?
I have a question. So you talk a lot about wallets versus banks. So right now I have maybe 3 wallets, and then would Avalanche be considered a bank? Like, what's the distinction between wallet and bank, if there is any?
There is, and I'm glad you asked that. See, this is where it's awesome to get feedback, because I don't even think about it in that way, but it's good to hear somebody that does. So a wallet is just where the money is held. There's no interest. You can't borrow off of it, right? So when you put your money in MetaMask, you just have money in there. Like, it's just coins in MetaMask. Once you bring those coins onto Aave, now you created a bank, right? Because why? They're giving you interest and you can borrow off of it. So what I'm saying is, instead of buying random coins like Shiba or this or that and hoping they go up, buy safe coins that have a shot at existing for as long as possible. And I told you the 4 that I'm doing this current wallet with. Bitcoin, granddaddy of them all. If Bitcoin is not around anymore, most crypto probably isn't any either. Ethereum is the most used cryptocurrency on the planet. Aave is the biggest bank on crypto. 10% of all cryptocurrency is inside of Aave collecting interest. And Avalanche is the blockchain that this is happening on. So a lot of things will have to happen for those coins to go away. So what I'm saying is invest in those coins at the right time, put them into Aave, grow your collateral, and borrow off of them to do other things, whether that's live your life or buy that crazy coin you heard about on some YouTube video, right? Don't take away from growing your bank to buy assets that you're not really sure are going to benefit you. But I'll tell you, I did the same thing with NFTs, right? I bought certain NFTs, borrowed actually all the NFTs I've ever bought. I borrowed off of the bank, and sure, some didn't pan out, but the ones that did panned out a lot. And that's the way investors, if you study venture capital, a venture capital firm invests in 100 companies and 2 or 3 become Amazon or Apple. Most of them fail. But if you think about this in this way, I'm doing it now, you borrow, you create your bank, you're growing your collateral assets, you start investing by borrowing in these coins that may go up or down. 1 or 2 of them, and NFTs, 1 or 2 of them may skyrocket, right? And those pay for all the rest of the losses, right? That's how most things work. Go ahead. Any questions?
I have a follow-up question to that. So I have, I think I have one bank now, right? Avalanche.
Yep.
And I started Polygon, right?
Okay.
That would be another bank.
Nice.
What are some, and that's for Sol?
No, that one is for Polygon and the Matic coin. So the same thing we're doing on Avalanche, you could do with the Matic coin. And actually that was where I started. So that's why I know how to do this now, because Polygon was the first one to do this. So not the first one, actually. Ethereum was the first one. But the problem with Ethereum was the gas fee was too expensive. So when Polygon did it, it made a lot more sense if you had a little bit of money, because if you're going to pay $200 every time you have to do something in Ethereum, you got to have a lot of money, right, for that to make sense. On Polygon, the gas fee is much, much less. So that was the first time I did it. Then when I saw Aave was going to do the exact same thing, Avalanche was going to do the exact same thing, I knew that this coin, all these coins would go up in value. So that was why I told you guys to do this one. Well, it was that.
So what are some of the other banks that are out there, and what are they affiliated with?
So good question. So one is called Compound Finance. That one, I believe, is only on Ethereum. Let me actually check. I haven't looked in a very long time at Compound Finance. Let's see what it was, because Compound Finance was only on Ethereum when I did it. And I tell this story a lot, but I'll tell it again just so you guys learn the lesson that I had to learn. When Compound Finance was at its height, Ethereum was growing big time. So I'll tell you the full story again. I put all of my Ethereum and all of my Bitcoin into Compound Finance, and I borrowed cash to buy Polygon Matic when Polygon Matic was 33 cents. So again, right, in my world, I thought, okay, that's not risky because I still keep my Bitcoin and my Ethereum. And if Polygon doesn't do what I think it's going to do, I owe that cash back. Okay, but I'll pay it. I have like years to pay that back. Polygon did work out. But what happened was the whole market crashed. And when the market was crashing, my loan was about to be called. But at that moment in time, Ethereum was enormous amount of use. So I had to spend $1,000 in a transaction fee to save all of my Bitcoin and Ethereum from being liquidated. So when that happened, I luckily worked it out and I didn't lose anything. But I said, okay, that's never happening again. I'm not going to be on a bank where the gas fee can be that much, right? So I moved everything to Polygon and I grew the wallet over time. And now Aave is the new kid on the block. I'm doing it there too. So I still do it on Polygon as well, and I'm doing Aave. So Compound is one. Let me see where they are. What blockchains? If they're still only on Ethereum or not. Okay. It looks like it's only Ethereum. All right, so let's go to Ethereum so I can show you how this works. I really liked Compound though. I liked the way everything worked on Compound. It just was that gas fee was nuts. But if you can see, look at all the coins you can list as collateral in Compound. Another thing is Aave works on Ethereum as well, which I'll show you. So if you go to here, okay, I don't have the bank here, but you can see here there's $16 billion here. This is what I'm saying. Like, this is crazy. $16 billion on the Ethereum one. Look at all the assets you can use as collateral. DAI, Gemini Dollar, just a ton. Right? But again, the gas fee means that you got to have a lot of money in here for it to make sense, because everything you do is going to cost you like $100 to $200. So if you don't work that into your calculation, you're basically losing money. So this is really for people with a lot of money. That's why there's $16 billion in here. But if you look, there's $16 billion in this bank. This is another Ethereum bank right here. There's 26 million, which is nothing to sneeze at either, right? Okay, then we got Polygon, which is the one I have one bank on. This has almost $4 billion in here. Then we have Avalanche. Avalanche has $6 billion in there. So if you add all that up, 6 billion, 4 billion, 16 billion, that's about $40 billion, right? 16 plus 14, I think that's 30 billion, right? Something like that, whatever. The entire crypto market cap right now is $2.7 trillion. So that's actually more than 10%, right? So it's a crazy, crazy thing, right? So it's just interesting time, man. I think it's really early. We're early in all this stuff. It's just getting okay. Another one. Okay, so you asked. Solana has one. It's called Mango Markets, where you can put in collateral assets and borrow off of them. I have a bank here too, actually, because I bought Solana at $100 and I was looking at it at $30 and I didn't move quick enough and it went to 100 and never came back down. So that's why I'm saying, like, Avalanche may never come back down to $55, right? Like, but we got it at $55 because we were buying on dark red. If we would have just been like, oh, I don't know, should I buy now? Should I buy later? But with this method of anytime you see dark red, buy some, just a little bit, if you can, whatever percentage makes sense for you. This has been working for me for like 6 months now. And I have overall 5x my retirement money that I put in here. So that's really big. When I had that same retirement money in something that was giving me 8% a year. In this year, I 5x'd it, right? And it was there for 10 years doing 8%. And in this year, did five times that, right? So that's why this is such an interesting time that you all really need to just get in here, play around. Like, I know I've lost money, I've made money learning, but what I have created is this methodology that I'm going to do forever. As long as I see this is still the same way, I'm going to keep doing this. Because imagine if I 5x'd it this time, it might take 4 years again for this type of run to happen. But okay, let's take easy math just to make easy math, right? Let's say it was only $10,000 that I took out of my retirement and I 5x'd it. So now I have 50,000 value, right? So imagine in the next 4 years, I keep putting money in, right? Let's say I put another $10,000 a year. So now we got 5 more years. Now it's 100,000. And in that 5th year, I 5x it again. That's 500,000 starting from $10,000 in less than 10 years. That is, and this is, if you look in history, that would have happened if you did this in 2013 to 2017, 2017 to 2021. There's no reason to think it won't happen again, but just because it happened before doesn't mean it'll happen again, right? But because it has happened multiple times before, all you can do is assume that it will happen again, right? So that's what I'm going to assume, and that's what I'm going to do. So, and that's if you just started with $10,000. Imagine you started with more, right? So that's why this is serious business. We all should be trying this stuff. It's really intense stuff. But again, I know most people think it's risky, but again, I posted something on Instagram. Imagine when most people don't think it's risky. Do you think the returns are going to be this low, this high? Most likely not, right? Because we are in early. We're going to benefit from investing early in innovation, right? That's how it works. If you invest early in a startup and that startup works out, you make a lot of money. But if you invest later in that startup, you don't make as much as the people that invested early. And it's fair. They took the most risk. So right now we are taking the most risk. But again, I'm trying to teach you how to take the least amount in the most risky asset, because what makes it risky? People buying at the top. And then it goes down 40%. And they're like, oh, you see, this is bull. No, it's bull because you were not understanding. You bought at the worst possible time. So I know that was a long-winded answer, but I think that was all the banks I know of currently. Aave, Compound, Mango Markets. Those are the ones I know. Of course, they're going to be more coming up. But, Banky was one. We did Banky early on in the Avalanche before Aave came on. I remember, Leah, you did. So Banky was one for the Avalanche blockchain. But Aave is such more of a standard. It's on multiple blockchains. So, and they're giving higher interest. So I just felt like it was safer to be in that bank, right?
Doesn't Joe count as one as well?
So Trader Joe, can you borrow off Trader Joe? That's a good question. I don't know if you can borrow off Trader Joe. So any place you can borrow, that is kind of a bank, right? They're going to give you interest. They're going to let you borrow. That is a bank. So lending, yeah, you're right. Let's see. So look, you can borrow. I mean, they will give you on deposit 5% interest with 5% reward. So 10% interest. But if you look at Aave, let's do it. All right. So if you look at Aave with the Avalanche blockchain, they're giving you, on Aave, they're giving you 13% interest. So it's better. Aave's better. Let's see the other coin values, the other percentages. But you're right, Isabel. Yes, I'm glad you said that because I didn't even know that you could do this. This is why we bring up the community. Everybody's researching. So that's why I want you guys to join the Discord, because what I'm trying to really create here is a hive mind of people who are interested in understanding this, because right now I'm deep in it, but of course I can't know everything. There's no way. It's so much. So the more people are bringing stuff to the table and we all can learn off each other, the better, the more we will all benefit, right? So that's why I want you guys in the Discord. I want us all having conversations about what you understand, what you don't understand, what coin you found, what NFT project you found, and then let's all dive in together, figure out what makes the most sense. If you look, MIM, look at that. MIM, 9%. I've seen MIM. MIM was another one I caught pretty early and I didn't buy it. But hey, you can't catch them all, right? Like, you can't be invested in everything.
Can I ask a question?
For sure. Go ahead.
So I was reaching out to you before because I've been so used to us putting money for USDC to use that as a stable coin to buy and sell.
Mm-hmm.
But because most of the money I had that I wanted to put into Aave was in Ethereum, I still kind of have that mindset of using my money from Ethereum to buy, when it's on low, other coins.
Okay.
And my understanding right now is since Ethereum is more of a, I don't know, maybe a valuable asset.
It definitely is.
That's not the best thing to do. And so I was thinking, okay, if I have 1,000 on Ethereum, I could put 200 on Avalanche, 200 Bitcoin, and all these coins that are down. It would be a good investment.
So this is where borrowing.
And then while I was waiting to hear from you, I was thinking, no, because it's probably better for me to just use $10 of my USDC at a time on these things that are low and not take away from the Ethereum. Is that kind of the mindset it should be? Like, you shouldn't really take away from Ethereum and Bitcoin specifically?
So I'm glad you brought this up, because let's say you have only Ethereum and Bitcoin right now, right? You don't have any USDC. What you're saying is, should you sell some of your USDC and Bitcoin to buy these assets that are low, like the Aves,
should I sell some of the Ethereum
to create USDC?
Yeah, to get the coins that are also low. So I mean, Ethereum was low, but also AVAX, no, not AVAX, also Bitcoin Aave were low, and I knew that I wanted more of that in Aave, and I didn't have any.
So
I
this
wanted
is
to
where
bump some of Ethereum for that.
So this is where borrowing comes in, right? So, okay, you have money in there. You don't want to sell right now because those coins are down. You don't want to sell on downs. You want to sell on ups. So you have available to you some borrow power, whatever that is. This is where you start to borrow some by keeping it safe though, right? So when you press borrow, I'm going to show you on the screen, right? So if you're on dashboard and let's say I was in her position, I didn't have any USDC. I would say, actually, I could do it right now. I'm going to withdraw all of the USDC so you can see what will happen in that scenario. So when I withdraw the money from the bank, basically what happens is they just put it in my MetaMask wallet, and now I'm not collecting any interest. It's just in MetaMask. And this is how I send it back to my bank, to my actual Coinbase card to swipe and all that, right? So, but I'm going to remove it all so you see. All right, so now there's no more cash here. Of course, I got to refresh. Okay, so now there's no more cash here. I'm in your exact scenario. I have $370 in here because the cash is gone. And I see that Aave and Ethereum and Bitcoin are down and I want more of it. What I could do is I go here and they're willing to lend me $200 right now. So I would not borrow more than, you never want to be under 1.5 on your risk factor. So I would be borrowing whatever they let me. So what I try to do even here is I'll borrow a percentage of what they allow me to borrow. So let's say they let me borrow 221 right now. What I'll do is I'll take a calculator and I'll say, all right, I want to borrow 5%. Let's say 15 or let's say 5% because I'm just buying one. I'm going to borrow 5% of this. So I say times 0.05. Okay, $11 is 5% of what my borrow limit is. So I'm still safe, but I am still buying more. And that 5%, that $11 is going to turn into more money. This is just like if you think about real estate, right? Like if you're going to buy to get something that you know you're going to make more money on eventually, who knows how long though, because crypto's crypto, I think it's worth doing. And this is what I did in the beginning. Literally what you said is what I did. I said, okay, how much are they going to let me borrow? Because I don't want to spend my Bitcoin and Ethereum to buy Polygon. I want to borrow. So they gave me a limit and I kept it safe, right? So I was up to 1.5. I said, all right, I'm going to take the risk. Let's say if I would have had this much money, I would have bought $182 of Polygon, right? Polygon 10x from there. So that $182 would have turned into $1,800 from $182. Of course, that was lucky. It wasn't luck. It was educated guessing because I did a lot of research on it. I knew it would go up. I didn't realize it would go up that much, but it did, right? So if you want to, you could do the same thing. And what you do is every time it goes up and you sell some, you pay down the loan, right? So let's say it went up and you made $7. Let's just make a random number. You put back 3 into the loan and 4 into your collateral. If you keep doing that over time, your collateral assets are going to grow and grow and grow. The big thing that I see with crypto is a lot of people want to get rich quick. Like the idea is, I always get this question. I got $5,000. What coin should I put in so I can make a quick 3x? What kind of question is that? It's like, go to Vegas. You know what I mean? I don't know. Like nothing is a guaranteed quick 3x. Even the ones that do, you don't know that when you put the money in. It's not like you're like, oh, this is going to make me 5x in a week. No, you just put it in and see. but you also have to understand that you probably could lose your money as well, right? Like when I put that money into Polygon, I said to myself, what happens if this doesn't happen and I lose this 6,000? One, I said, what's the likelihood that this goes to complete zero? I don't see that happening. First of all this Aave stuff hadn't even launched yet. So I said, okay, when Aave launches on Polygon and people know they can get high interest, they can borrow, and they pay low gas fee, is that really going to go to zero? Let's say it goes down 50%. I still could take it out and pay down my loan. Now I only owe $3,000. But I know Bitcoin and Ethereum are going to go up. So eventually I'll sell some of that and pay down the loan. This is how you got to think, right? Like you don't take out a loan without really having a strategy to repay it, right? Like a bank, you can't go to a bank and say, hey, just give me a loan. I don't have a job. I don't have any way of making money, but I need the loan, right? They'll never give you the loan. They will give you the loan though, right? So that's where you get the danger of, with great power comes great responsibility, right? They will give you the loan and you'll lose all your money because you can't pay it back. So every time I take a loan, I think about the strategy of paying it back. And right now, the strategy has been working for me for like 6 months with NFTs and with other projects. The big thing though, there will be a big crash eventually. If you look in the history books, and I'll show you the history books right here, there's always a big crash. Always, right? So I'm going to take you back to 2017, time machine, 2017. Look what happened. This was the height of Bitcoin. It was $19,000. It went down to $6,000. That's a big crash. This is why I'm saying I'm selling all the way every time I see dark green. Why is that? Look at where we are here. If we go back in time and we follow my current formula, which I have to name it. I want to name it. So if we were following my current formula and we were selling 5, 10, 15, 20%, right, at a time, we would end up with very little Bitcoin right here. But we will have a lot of cash, right? And then when it came down to even here, we will be buying more, buying more, buying more. Because we had the cash to buy more. But if you just keep it as Bitcoin, when this crash comes down, one, you're going to be able to borrow less. And two, the value of your collateral is going to be less. So this is where I started coming up with this idea like, all right, no matter what on the ups I'm selling, I don't care about the tax hit. I don't care about what I think is going to happen. I'm selling no matter what. When I see dark green, I'm selling something, no matter how, because one of the hardest things to do is to sell when you see it going up, because you're like, but what if it keeps going up? I don't want to sell right now. What if it doubles tomorrow, right? That's the greed taking over, because if you're up a lot, start taking some off the table, because you never know when that down is going to come. So it's better to not make as much as you could possibly make on the way up, as opposed to losing a lot more when it's on the way down. So I don't know what the question was and what this led me to this, but any questions from that?
Yeah, I just wanted to kind of align a couple of things that Miguel said, particularly in traditional banking. So let's assume for a second that I have, $30,000 in that bank in CDs. And the CDs could be 3 months, 6 months, 12 months. I split the 30,000 into that. And I'm buying my CDs, certificates of deposit, through the bank. Let's say that I owned regular stocks in Apple, Amazon, or whatever, and I have another 60,000. So I have 100,000. Now I go to the bank and I said, I'm out of a job, just like Miguel said, and I want to borrow 15,000. The bank will not say, I'm not going to give it to you, but the bank will say to you, the question for a banker when they're lending, and remember that I was a banker, regular banker, remember that I was a regulator with the New York State Banking Board. So I regulated SNLs. So I know a little bit about this stuff. not much. So the bank will always have a question, and I worked for a bank when I got out of school. You want to borrow how much? 20,000. My question to the borrower is, how are you going to pay me back? You don't have a job. I'm going to put up collateral. What kind of collateral do you have? And then you go through your CDs. I probably have CDs here. I probably did have. So as a banker, I said, I want the equivalent of minimum, the loan you're taking, plus a little more. So I will give you the loan, but the loan is then collateralized, meaning that if at some point, for whatever reasons, and I take, if you say I'll put the collateral as a CD, I'll lock those CDs because I have you sign those CDs to the bank as collateral, so you could never access those CDs. I have them locked. That's the way that traditional banking works, and you probably, some of you know that. But you can get a loan if you have collateral of any sort, and it could be CDs, it could be stocks, it could be your house, it could be, it can't be your car. They don't take cars, but anything that has value. In this situation, and you have to go through a process. You have to put up you have to do an application.
Credit check.
On all that stuff. You have to go through a process. And even with money in the bank, even collateralized, most banks cannot turn it around in 24 hours. Might be 48 hours, might be 90, whatever it is. So it takes time. Miguel is basically saying that in this platform, the collateral is the money that you have in the different coins, for instance. That's your collateral. Mm-hmm. And those banks allow you to borrow X% of that. And you borrow X%, but you do it at a click of a button. So the same person that I gave you before, if assume they have the 100,000 in different coins, they can take that 20 grand out like
in minutes.
In minutes. So that's the difference. It's still collateral. What's your collateral in this? You have coins that are worth more than what you're borrowing. And so the convenience of doing that is what's important. And Miguel's not advice, because Miguel is not giving here any financial advice. Miguel is saying, this is my experience. You do whatever you want, but don't sue me because you lost all your money and said Miguel advised me.
I didn't tell you about Shiba.
Miguel does not advise because Miguel doesn't know shit about this stuff. Miguel experiences this stuff on a day-to-day basis, so he's ahead of all of us in all of this stuff. But basically, it's still the same formula in terms of collateral, except that you can get it faster, and two, the same rules. You know, if things go down, what he calls a call means that you say the Ethereum, whoever it is, will say you got to pay your bank your loan back, or I'm taking your collateral.
Yep.
The regular bank would take your CDs. In this platform, they'll take whatever coins you may or may not have. And Miguel has already experienced that.
Yeah, I lost $8,000 doing it the wrong way.
He lost $8,000 on a call. So the reason I say this is because this is exciting territory. It's brand new territory, but this is not a game for the weak of heart. You have to have a certain risk aptitude or attitude about this. If you don't have the risk attitude, as Miguel says, don't play with money you can't lose. Now, Miguel is different. Could Miguel afford to lose $8,000? Hell no. But he plays. So that's the warning. That's a red sign. Go slow, go carefully, and you make your own decision. Don't blame it on Miguel or particularly Leah, who likes to give advice. Anyway,
I'm glad you brought it up, Paco, because what I learned in that moment when I lost $8,000 was if I would have had USDC as collateral, I wouldn't have lost my money, right? Because again, sometimes I'm hard-headed too. The first time it happened to me on Compound Finance, I just had Ethereum and I had Ethereum I had Bitcoin, and I had I had about 10% of the overall of Bitcoin and Ethereum I had in cash as deposit. So it was in my collateral, and that's what saved my loan, because they were going to call it, right? It was the prices were going down, down, down. But as they were going down, the cash was keeping the value up of the collateral, because the coins that I had in as collateral were going down in value, right? So Bitcoin and Ethereum were going down like 40%, but the cash was not going down at all. So it gave me a few more minutes to pay the $1,000 gas fee and get out. So I said, okay, I'm going to do that again on Polygon. But here's what happened. This is where it's a super good lesson. The Polygon grew so much that it was a lot. So I borrowed about 40% of what the full value of the collateral was. But then the whole thing came down, and I still had like a huge amount of money I owed, but luckily I had the cash. So what happened was, when it came down, they took a third of my collateral assets. So it was about $24,000 of full collateral when they took the $8,000 away. So it happened in the middle of the night. I woke up and I'm like, that's a lot less money I have there. I'm like, what happened? Like, I didn't understand what I was looking at. I'm like, I know I had a lot more than that. And when I looked in the middle of the night, the price came down so fast, so hard, that I lost the collateral leverage, but it still was cash in there, and I still lost the leverage, and they took the 8,000. So I said, okay, now my strategy is keep the amount that you want to borrow, make sure it's there as collateral and cash. Why? The market could go all the way to zero and still your loan is not going to get called. Because if I only have $500 of collateral in USDC and I only borrowed 500, I'm good, because Bitcoin and Ethereum can go almost to zero and I'm still safe. That's the major lesson that I'm showing you here. That's why I started out with USDC. Everybody's like, oh, I want to buy Ethereum, I want to buy that. I'm like, no, buy USDC first, because that's how you build the bank the safest. I didn't do that in the beginning. I put in Ethereum and Bitcoin. And I luckily thought, you know what? I'm going to put some cash in here because they're giving me higher interest. Luckily, because I might have lost everything, right? And I would have to start completely from scratch. And that would have been a major lesson. But I told myself this year, look, I don't care how much I make. I don't care how much I lose. I just got to learn this to a T, because this is the future. And the more I understand it, the richer I will be the fastest, right? So I said, okay, I'm going to learn about NFTs. I'm going to learn about the metaverse. I'm going to learn about the coins. But the way I learn is by putting money in, because once you put money, you actually pay more attention, right? So I bought NFTs. I bought land. I bought coins. I bought new ecosystems. I lost a lot. I gained a lot. I gained a lot more than I lost, but it wasn't all wins. There's coins that I'm down a lot of money, and I'm like, guess that's not going to come back. But it's cool, because that's, again, the venture capital world, right? You invest in multiple things, and the ones that win way outpace the ones that lose. So this whole strategy is, I want you guys to start building the bank. Literally, people are texting me, DMing me, what should I buy? What should I buy? I'm not going to recommend anything except these 5 coins that build your bank. If you want to borrow off of your bank to buy the crazy coins, that's up to you. I'm not going to recommend that, because I don't believe that's the best move.
And Miguel, I want to tell you that you're not recommending anything. You're not recommending.
You're right.
Caca.
Not
you
financial
are buying
advice.
those things for yourself, and you're sharing that you're buying those for yourself. If people want to do the same thing you do,
yes,
you do. But you can't be recommending.
Paco's talking about
any coin.
What our lawyers have told us to say. This is not financial advice. You're just watching what I do. If you choose to continue to do the same thing, that's on you. And I get it. Like, I've done it myself. I've seen people do it, and I'm like, oh, I'm going to try it. And I did reap the reward of that. So Cooper on LinkedIn asked, have you ever used the Miguel strategy with a bot? Not yet, but I'm working on it, right? The idea is I'm definitely want to make sure all the variables that I use work in the longest period before I code up a bot. So the idea is eventually there will be a bot that can do this without you having to go every day. But that bot is not coded. And I think the next few months, people can make a lot of money. And I'm showing it on this $1,000 wallet. Here's the pro and the con to following along. If you follow along and we make a lot of money, cool. If it crashes, we'll lose some money. We won't lose all of it because I won't let the USD go to zero, right? That's just, there's going to be a level where I say, okay, my bills, let's say this is $1,000 wallet and my bills are $500 a month. I'm not going to let the USDC go under $500 a month. If I start buying on the reds and I get to 500, I'm going to stop, right? So that's my current strategy, because the idea is you always want to have at least 1 month of your your borrow in collateral. That's the strategy, right? But there's many different strategies. There's different wallets I'm doing different strategies. But with this is the safest strategy I've thought of that I've seen work, right? So the idea, though, is if you can start that process now, every day you start it, you're closer to that freedom if it works, right? At the end of the day, it's worked for me for 6 months, but there's been one big crash, and I told you about it. I didn't have all these strategies in place in that big crash, and this big crash was like in May. So after that, I implemented this strategy. I paid my entire loans off, and I started making profit again. And then I said, all right, now I'm going to invest in NFTs. The problem with NFTs is they're not as liquid, right? So right now, I told you guys about the property that I purchased in Decentraland. If I wanted to sell that, I would have to find a buyer that's willing to pay me the price that it says that it's worth. That's not going to happen instantly, right? So if I needed to pay down a loan for the Decentraland borrow, I'll be screwed. So I said, all right, I'm going to pay down that loan through the coins, and that will give me more time to find a buyer if I ever wanted to sell it. I don't want to sell it because I think that land is going to be worth more than real world houses one day. So my idea is pay down the loan through gains of coins. So again, the worry is people start to follow along once we're in the highs, and they want to buy in when we're at the height of this thing. And what I'm telling you now is there's dark red everywhere. This is the time to start, because it can go more dark red. That's definitely a possibility. But if you look at the history, it doesn't go dark red forever, right? Even when it's the bad time, the baddest of the worst times, dark green is right around the corner. So if you're buying on the dark red time, you're going to be okay if you have a long enough time horizon. If you're expecting to double your money in a week, that's not going to happen. So don't do it. But
question.
Go ahead.
I have a friend of mine that's thinking of opening up a wellness studio it's the traditional dance studio, but it's going to be a movement studio.
Mm-hmm.
And this person wants to either buy a building or rent space and begin that business innovation. Is there any way that person can use some of the learning that you're giving out for as NFTs, as tokens? Is there any structure that person can use before they drop in? Because they're going to have to drop a lot of money first for rent,
Mm-hmm.
The security of rent. So imagine that it pays $3,000 a month. They're going to have at least 2 months of rent security, which is $6,000 plus 1 month. That's $9,000 plus renovation in place. Before this person opens up the place, minimally they're going to have to spend 15-20 grand before they have their first client.
Sure.
So is
yes.
there any advice in terms of NFTs or the stuff that you're doing that this person can begin to explore, and I can advise them to take a look at?
Sure. So what I think about, and this is what every business I'm involved in, nonprofit, for profit, again, before you go, because this is the worst thing about business. When you actually need the money, nobody's going to give it to you, right? So when you are in the position of starting an idea, if you can start building up the bank of that business, right? So let's say, again, your monthly is going to be $3,000. Don't start the business without having a few months of that, right? And a place is not even going to let you rent it unless you give security, right? So you're going to have to save up something anyway. No matter what, you're going to have to save up something before you take on a location. So let's say, use Paco's numbers, it's $3,000 a month they're going to charge you for the space. I would figure out how, either through renting another location whenever I can, to build up at least a few months of that cost, right? So let's say I rent somebody else's space to come up with $6,000 of doing classes in somebody else's space. So then I'll have $6,000. Then I would do this, right? So I'll put the 6,000 into the crypto world. And now I have 2 months of space in real dollars, but I could always borrow that 1 month, right? So now if I go, I could borrow that 1 month to pay the safety deposit. And now I still have my 6, this is USDC. So I'm not even talking about the Bitcoins, the Ethereums of the world, but I would start slowly buying those at the right time, selling them at the right time to grow that. Of course, the more months you can do that with, right? If 2 months is a little risky, I would try to do it as many months as I'm able to, right? Because business, look at what happened with COVID. There's some things that you can't predict, right? So you got to have a good year of your costs, especially when it's a location. What's good about virtual is you could do it anywhere. Once you have to pay a location, there's expenses that are based on world events, right? Like there could be a fire.
Yeah, Miguel, let me ask you this. Can the business itself become an NFT? And let's say that business was called Miguel's Movement Studio. Could Miguel Movement Studio become an NFT? And can that business be tokenized so that anybody who comes in to become a member and do movement exercises there, they have to buy at least one token or something as part of their things, that only people with tokens can come in and exercise? Is that feasible?
So this is happening right now. All right, so I'm going to give you a story, insane story that happened to me last week. Pretty crazy. So I bought these NFTs. They were based on, there's wallet addresses, right? When you create a MetaMask, you have this long wallet address. And if you want to say, hey, pay me to this wallet address, you have to know that wallet address. So you either have to go copy it, and it's a crazy long number. It's safe because they can't get your money. They can only send you money. It's kind of like a bank account, routing number and a bank account number. So this company came up with this idea to create a naming service that will connect to your wallet. So it's an NFT that you buy. So if you see on my social media, some places I have Miguel Sanchez .eth. That is a name that's connected to my wallet. So when I do my classes and when I tell people, go look at my NFTs, I can say, go look at Miguel Sanchez .eth, and you will see what NFTs I have. So because I bought those NFTs, I didn't know this, but I was an early investor in the company. They created a utility NFT that I wanted to use. I paid for it. I bought a bunch of them because I really liked the idea and I thought this was going to take off. Because I did that, eventually they released a coin. And because I was an early investor in their NFT, they gave me a lot of coins and they were worth a lot of money. So literally they dropped a lot of money into my wallet because I was an early investor. So now looking at this from a business perspective, if I was starting a new business, I would look at this model. What could I create as an NFT that rewards early investors? So if I take your example of this dance studio, let's say the dance studio was going to cost $100 a month to be a member, and you come in and there's classes and everything. What I would say is, okay, I'm going to sell lifetime membership right now as NFTs. So if you buy the NFT right now, for $1,000, I'll give you lifetime access. Why would you do that? Because that $1,000 right now makes it more likely that this business exists in 5 years. Let's say you get 50 people to give you that $1,000 right now. You got $50,000. Now you're worried about how you're going to pay the next month. That's $50,000 in crypto too. So now you could do what I'm saying. You could borrow up to 25, maybe 30, $40,000 off of that 50, right? So now you start to see where this happened. Then later on, you can drop a coin and say, just like these people did, hey, thank you for being an early investor. You helped me. You didn't realize it, but you were an early investor in my company. I'm going to give you X amount of tokens because you showed up to this many classes. You did X, Y, Z. So here, X amount of tokens. Those tokens are worth X amount of dollars. Thank you. And that's what this company did. This all happened in a matter of 4 months. And I'm talking about, again, if you know how to go see wallets, you could see how much money they gave me. And I sold some of it, actually. They gave me more money than most people make in a year because I was an early investor in the company. And again, I did not expect it at all. But it was, again, me investing in things early. I was like, this is a genius idea. I'm going to do it. I'm going to use it. And I was a venture capitalist and I didn't even know it. Right. So there's another question. Okay, there's a good question, actually. Can we or should we start today and buy Avalanche on Coinbase? Today, even though it's an all-time high? It's a great question. So this is what I would do if you were starting today. I would not buy Avalanche to keep it and put it in my bank. I would buy Avalanche because the way you can send Avalanche to your bank directly to the blockchain of Avalanche is on Coinbase. You buy Avalanche and you send it to MetaMask and it automatically goes to the Avalanche blockchain. What I would do then is I would go to Trader Joe, which I'm going to show you on the website. I will go to Trader Joe, trade that Avalanche for USDC, and then start my bank. And then wait for the coins to be at the right prices to buy them. Today, a good price. Today, Bitcoin is on dark red. Ethereum is on dark red. Aave is on dark red. So it's a good day to buy those coins, but not Avalanche. But the reason you buy Avalanche, as some of us have done, you can send Avalanche to the Avalanche blockchain in a few different ways. You can send it to the Ethereum blockchain and then bridge it, which I have videos of. Or you can buy Avalanche and just send it to MetaMask and it automatically goes to the Avalanche blockchain for cheaper and faster. So what I do is I go and then I trade it for USDC and I put it in the bank, right? I'm not just holding the Aave right now because it's not a good time, Avalanche, because it's not a good time. It's the highest price it's been in a long time. So maybe ever. So it's not a good time to buy that and just hold it. But if you buy it and you trade it for USDC, now you still have the amount of value that you put in, assuming nothing goes down a little bit. You have at least close to it. It may actually go up while you're doing it, which is fun. But so now you start the bank with the USDC. I would tell you the safest way to start one of these banks is USDC. I personally have started banks with different coins. This is the safest one. That's why I'm doing it live on video. In the Cracking Crypto class, I show these guys all kind of wallets with different strategies, but this is the safest one. USDC, slowly buy the assets when they're at the lowest, dark red, sell some on the dark green. Your asset grows. Of course, we could be talking about years before you have financial freedom, but tell me something else where you have a path towards financial freedom within under 10 years. I don't really see one. Without having a lot of money up front, I don't see one. Because you could do real estate. Oh yeah, you can buy a building. Yeah, but you need 20%. You need great credit. You need a very good job. And you need all kind of stuff for the bank. You're going to go through hoops and all kind of stuff. And they may still say no. Right? There's no, you saw, I just literally took loans, bought stuff, sell stuff. Nobody's asking me anything. I'm just doing whatever I want with my own money and getting more interest than anywhere else. It's really hard to beat all that. Really hard. At least I've never seen it. And Paco, who's been in banking, even he's like, whoa, okay, this is pretty game changing. So, of course, what I would tell you today is if you were starting today, buy Avalanche, send it to your MetaMask wallet, convert it to USDC, put that in Aave, and then buy the coins on the dark red. Every day you see dark red. Sell some of them. Every day you see dark green. That's the whole strategy. I'm going to keep doing videos every day of me. And eventually this wallet is going to be thousands and thousands of dollars. And it's going to all start from $1,000. Again, I started it actually at a really good time because the first day everything was dark red. I didn't plan that. It just happened. So I bought a lot of things in dark red first day of the wallet. I was worried that if I started the wallet on the high and there was nothing to buy, it just worked out that way. But if you follow the strategy of only buy on dark red, no matter what, I know some days it's like, nah, I just want to buy something today. Don't do that. Only buy at the right time.
The other thing is, your own emotions, how you can handle this. So anybody can handle the ups. Oh man, I'm making a lot of money. How can you handle the downs? So let me give you a very specific example. I was in California this last weekend, and on Friday, I went there Thursday. So on Friday, I showed my son, who's a CPA, what I had. And he said, wow, Dad, how much did you put in there? I said, I put X. I said, oh my God, you probably are about 3X or 4X up, right? So I was kind of cool in very small amounts of money. Believe me, underline small, very small amounts of money, right? I now looked at it while I was talking to you guys here. I'm down in my portfolio at somewhere between 8 and 10% down from last Friday, right? So if let's take the small underline and make it $100,000. If you think that's small or big, I would have looked at my portfolio and I would have lost 10 grand before last Friday and today, at least. Now, what does your stomach? What kind of stomach do you have?
Yeah, very much.
Okay, and that's why I'm doing with the small. I don't have nowhere even close to the 100,000. Very, very small. So I'm saying to myself, well, I'm reacting to the fact that I lost, a couple of $100. Very interesting. Very interesting. What is my stomach? And my stomach says right now that I don't have Miguel Sanchez's stomach. Right?
Yeah, I mean,
so
that's true.
This is a very personal thing.
Yep.
And some of you are very young. And if you have the stomach to lose 8-10% on the downs, by the way, which are normal for this business, for this ecosystem in banking and in stock markets, unless it's a crash, you get the 10-12%. If the market goes down 12%, it makes front headlines. In crypto, 10% is nothing. 12% is nothing because it'll shoot right up again.
Yeah, go
and
20%.
So
exactly.
You will go with 20%. So you gotta work with yourself as to understanding how deep these things go and how high they come, so that you could deal with your stomach and your psyche and your I forgot the word, but I'm looking for but you can't make it affect you psychologically and physically. You
so
have
there's
to
a
have
book.
The warrior's mentality to be able to do this, and that's why Miguel says start with small amounts of money, because you're training not only in the transactional aspects of it, but you're training yourself psychologically to see if you got what it takes to play in this arena.
Yeah, and there's a really good book that I just read on somebody's recommendation called The Psychology of Money. And the writer of the book, he even says, I know all of this. I understand how people make millions and billions. I can't handle it. Most of my money is in cash. I just cannot play in that world. I know that about myself, so I'm not doing it. And what he talks about in the book is how to understand yours. And what Paco is saying is that, like, how does money make you feel on the ups and the downs? Because there's people, I had a client who literally, when it was down, was really, really wrecked. Like, and I was just like, you know, I get that it's down right now. And, you know, for people with, like Paco said, with hundreds of thousands of dollars, when it goes down 10, 20%, it's a lot of money, right? But again, if you have long enough of a time horizon and you're like, do you really believe in this asset class or not? That's how you start to get the stomach, right? Because the more conviction you have for the industry and the technology, that's how you start to say, this is a blip in the radar. 3% of people even know this exists right now. I know it's down, but watch, it'll be back, right? And this is the conversation I was having with the guy, and now he's up like ungodly amount of money. But those days, he was like, I don't know if this is asset classes for me. I can't do it. I don't know how you do it. I just lost so much money. It's crazy. And then now it's like, oh, I'm about to buy a boat, right? So it's like, this is where like but he trained himself during that down. That was a valuable lesson for him to see. So now, guess what he's doing? On the way up, he's selling some, because when it comes down, he'd rather have that cash, even not make the most on the way up, but know that he feels he's creating his own environment to feel good at all times in the ups and the downs. So this is what this is about. And this is why I'm showing this version of the safest one, because I do believe it can keep you in the best mindset. And then you start to figure out where you can take the more risky investments and learn how to do your own research, which is another big one, right? Like I told you, I didn't put that first borrow into any random coin. I didn't put it on the coin that everybody's saying is going up or it's going to be big one day. I didn't do that. I did a bunch of research and I tried the product myself. So you need to like create that environment for yourself and your investments as well. Like, what is your due diligence process? It's not just, oh, I saw Miguel talk about this coin, or I saw YouTuber X or IG influencer X say these words. No, you need to come up with your own due diligence strategy and say, okay, this fits my sweet spot. And that's why I've been doing well on NFTs and different types of projects, because I created my own sweet spot where it's like, if it doesn't have X, Y, Z, I'm not doing it. I don't care what everybody else says. And that's what happened with Shiba. I didn't make any money on Shiba. Everybody's like, oh man, if you would have put $700 right now, you would be having X amount. And I was like, it didn't meet my criteria. I lost on that one, sure, but I'd rather stick to my criteria, right? So you all got to create your own criteria, your own due diligence process, criteria, and then your own stomach for how do you take these highs and lows and see how that makes you feel, and how could you strategize so you don't take those hits on the low. And that's where this came from, because I lived it, right? I saw the lows literally the day before, and I'm going to show you on the chart, and then I'll end it because I got to go pick up my kids. But literally, I'm going to show you what happened with Matic, like literally day by day. Polygon, I'm on it. Yeah, okay. So here, it was at the all-time high here. Look, I bought it here at 33 cents. Look at the rise of this. This is April 27, 28, 29, 30, 31. So this is like a few weeks. It went all the way here. And literally this day, it was so euphoric. It's crazy. Everybody who I told about it, everybody that told me about it, we all were like, oh my God, I'm going to buy this. I'm going to do that. All kind of euphoria. And then boom. And we all were crazy. There's some people that we still haven't heard from again. Literally like, hope you're okay type shit. Like, but cause it hurts when there's some people that we knew that were millionaires when that hit. And then it went to not millionaires. That is pretty crazy, because people are buying it like when it was 3 cents, you know? So this is, you have to see it to understand yourself. And right now, there's no better time than right now to start seeing how you're going to feel because, you know, we're at the beginning. We're at the beginning. If you do this for 20 years, and again, I bring up crypto.com, you're going to tell me if you take this strategy, and I went back and I did it. I literally hand by hand said, okay, if I would have bought, let's say if I would have started with $5,000 and I would have bought every time it was dark red and sold every time it's dark green, I would have a lot of money, right? Crypto.com just bought the naming rights for 20 years. Imagine doing this for 20 years. Where do you think your portfolio will be? Where do you think your financial freedom will be? If you think about how on average this thing is growing 200%, and that's not even the coins like Matic. Matic grew like hundreds of thousands of percent this year. So imagine if you, and I didn't buy at that point. I didn't buy at that point. Some people I know did. This could really change your life really fast. It's just, you have to understand it and you have to be in it, or it can, right? You got to be in it to win it. So that's how I'm going to end today, unless there's more questions. Anybody with more questions?
Really quick question.
Go ahead.
If you see that running out of AVAX in your MetaMask, which you use to pay gas fees, is the way to get it back just clicking the withdraw on Aave, or is there anything special you have to do?
So if you withdraw an Aave, what she's talking about, I'll show you on the screen. So because you're getting this interest, look at the way they break down this interest. They're giving 0.38 in Ethereum, and they're giving 3.21 in Avalanche coin. So if you think about what I said before, they've been giving me 3% of Avalanche coin on different wallets for a while. Avalanche coin, when I first started doing this, was like $30-something. So they gave me 3%. Let's say I had $1,000. They gave me about $30 of interest. Avalanche has almost it tripled at least, right? So now this interest has at least tripled. But how do you get it? You have to claim it right here. So right now on this wallet, which I just started 2 days ago, I have, and you can go to the coin and put the amount of coins that you have, and it'll tell you how much it is in dollars. So I'm going to tell you right now how much money they've given me in interest. So 40 cents in 2 days on $1,000. It's not that much, okay, but I bet you your bank did not give you that much in 2 days, right? So that's the difference, right? So what you can do is you can claim this money as Avalanche, and then you can convert. You have to convert it though. When you claim it, it becomes wrapped Avalanche. Then you have to convert it to Avalanche. So it depends on how much you have in there, Isabel. It may not be worth it. What you should do is you should convert some of your other coins, or borrow and convert to Avalanche.
I guess my question was, is if I withdraw from my AVAX, and will that go directly to my Avalanche network?
Yes. Yes. So,
and that's the same for every coin if you click withdraw.
When you click withdraw, it just lands in your MetaMask wallet waiting for you to do something with it. So if you withdrew your Avalanche coin, it will be in there waiting for you to use it as gas fee. So yes.
Okay, thank you.
No problem.
And I don't know if this exists, but do you think Aave will have a debit card, kind of like Coinbase?
That would be super amazing. I'm sure over time, Aave is going to do all of that. Right now, it's like less than a year old. So they're doing all kind of crazy stuff. They just made a game. I just bought land in their game, and it was random. I found it like 7 o'clock in the morning on a Sunday. They made a game where you can play a game and make money through the game. Aave just paid for it to be made because they have so much money. So I'm sure eventually they will. Who knows how long? So this is where Coinbase right now is the way I do it. So I'll borrow, I convert it to Avalanche, I send it to Coinbase, I convert it to USDC, and then I swipe the card. That's how I do it. I
wanted to kind of put a comma, pause, to tell the people that are here that one of the things that we do in Beginner's Mind, aside from being on every day at 1 o'clock and on Mondays at 2 o'clock, is that we build a community of caring people in many, many ways. So there's somebody in the audience that I'm not at liberty to say who they are, who ended up with an e-operation that went bad. And the person was really kind of distressed about the damn thing, because this is a person that really likes to walk around, be around, whatever it was. Because one of our members, Silvia Bengochea's brother, is one of the top 10 surgeons of elbows, shoulders, and knees, and who has huge lines of people from all over the world waiting for him to operate on them. Sometimes you have to wait a month, 6 months, 7 months. We were able to cut through the line, and this person, which probably, I believe, I'm not sure, might be operated at the end of the month. Yep. So we create not only this kind of platform where we want everybody to be very, very wealthy and to do their own work, do their homework, but we also care about people's health, people's wellness. And if we have any ability to contact the many contacts that we have, whether it's in hospitals, whether it's in corporations, whether it's in school, we also do that. And to me, making money is good. Doing good and doing well. Doing well is making money, but doing good is the thing that is going to make you enjoy your money. Because, ask Steve Jobs, who's in the cemetery, the founder of Apple's, you don't necessarily want to be the richest person, woman, man in the cemetery, because you were so devoted to making money that you forgot to take care of some other stuff like family and stuff like that. And you end up with a lot of money, but you end up dead in the cemetery. So that's just to balance this conversation, which has been terrific, because Miguel is a giver. Miguel gives it all away. And I'm not sure, I'm not going to say the kinds of nasty things that I say to him. But the other part is, and that's because Miguel has a good heart. He is a very heartful person. I'm kind of taking you off topic, but I did it on purpose because there's more to this than just the making of the money. And some of you are very, very young, and you have to find the balance between one thing and the other. I'm done speaking.
So Paco's talking about our group called Beginner's Mind, where we literally create different daily shows on Clubhouse talking about different topics. I'm the crypto guy on this, but yeah, so if you're interested in learning more, there's many different topics we go over. Paco does a bunch of stuff there. A few different people come in and out doing different things. So there was one more question in before I wrap it up. Okay, how do you estimate the gas for converting from Avalanche to Ethereum? So when you are starting to make a trade like that, it tells you. And on Avalanche, I tried to transfer 10 USDC from my Avalanche to Ethereum, and it was $150 USDC. See, so this is why I say I don't do Ethereum. I send Avalanche to MetaMask, and that goes straight to the Avalanche blockchain. So there's no gas fee of Ethereum there. You are going to pay some type of fee from Coinbase. Once it gets to Avalanche, the gas fees are like 5, 10, 20 cents. Versus Ethereum, they're like $100, $150, sometimes $1,000, $50, something like that. On Polygon Matic, the gas fees are less than a cent. But the problem on Polygon is to get your money outside of Polygon, you have to pay the Ethereum gas fee. So Avalanche is the best way to get your money in and out by paying the least amount of fees. That's why I'm showing you guys this bank first. Of course, I am doing it on Polygon as well. But the truth of the matter is the fastest way I've seen is Avalanche. Of course, I wish Polygon was easier because the gas fee is cheaper. So hopefully I answer your question. So on that note, like I said in the beginning, you got to be in it to win it. I know this seems hard, the clicking, the websites. I believe you can do it. I know you can do it. It's just like anything else. You've learned how to use your bank. You've learned how to use your bank app. You've learned how to use Instagram, YouTube, Twitter. These are just things that are going to be normal in our lives. The sooner you can learn how to do them, the more you can take advantage of this amazing opportunity. Like, it's only going to get easier, but as it gets easier, the interest, the opportunity is going to be less. So not to say you still can't benefit in a year, 5 years, 6 months. You're just going to benefit less. And that's fine if that's what you want. I'm just trying to get the people who are really interested in benefiting the most to have all the information available to them so they can benefit along with everybody that like me that's benefiting. So on that note, thank you for everyone who came by on the Clubhouse, on the YouTube, on all the social media. Please join the Discord community, which is where we're having deep conversation about all this stuff. And I'm trying to create this hive mind around finding cool projects and NFTs and making sure everybody understands. So
Miguel, are you
yeah.
Miguel, are you on this Thursday or the following Thursday?
So that actually tomorrow is the Cracking Crypto class, which is a paid group where we do group coaching, where we show people's wallets, where we help people literally click through their wallets. So that's tomorrow at 7 o'clock, crackingcrypto.club. The link is in the bio if you want to join that. A lot of people in here are in the Cracking Crypto Club. So they've been taking advantage of this for a while. Hopefully you will get there too. Of course, my goal with that is to make sure you got more value than it cost you, right? Of course, that's up to you. You have to click the buttons to make sure that happens, though. So,
Miguel, thank you. Thank you so much.
Thank you,
Great
Pablo.
class. Great class. Thank you so much.
Thank you,
Thank you.
Miguel. Awesome, as always.
Thank you. Thank you, everybody. Have a good rest of your day.
Thank you.